What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we'll do some macro technical analysis on the indices. We'll be looking at weekly charts of the indices, and we'll also take a look at Bitcoin and the VIX. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, we're looking at the SPX weekly chart. So every candlestick does represent one entire week's worth of price action. So remember, we did have the price targets here at 45.34, 46.05, and 46.76. And remember that all of these levels could always lead to a pullback, and a pullback could always lead into a stock market correction. So right now we are starting to see a reaction to the downside after we did reach that price target at 45.34. We could see a very bearish looking red candlestick that did take out the low from a couple of weeks ago. So you do need to start getting a lot more cautious when we see the market pulling back. We see a pretty bearish looking candle because the price action did end at the low of the week, so we didn't even really start to see any buyers of the dip at that time. Now, obviously that's subject to change, so you still need to play it day by day. If I put the moving averages on here, you can see we did close just below the weekly 5 EMA, and we still do have a very strong bull trend. Now, typically speaking, when you're in a bull market this strong, the trend is not going to just die easily. So unless there's some sort of black swan event or something very bearish coming into the market, I'm not expecting to see this market go into crash mode or any major correction at this time. It's still time to be cautious because seasonality is still bearish. Going into September and October, you're more than likely going to see a lot more volatility. That's just the nature of the beast, and we do have quad witching coming up this week on Friday as well. So there's always plenty of rotation that could be happening that could lead to more volatility. So be cautious because we are pulling back from a critical level, and we don't know how far this pullback is going to go just yet. Now, the other thing I want to look at today is our log trend line. So if I switch this over to a log chart, you can see that we do have the resistance trend line in green here. And if you didn't watch last week's video, you might want to go back and get caught up on that video, because this resistance trend line has been very critical going all the way back to 2010 highs. We can see every time we hit that trend line, we did get a pullback. And if you want to see more in detail about that trend line, go watch last weekend's video. I'm not going into it in great detail again today, but I do want to show you how critical this resistance trend line is. So as I told you, we have never seen SPX break and close above that level. And as you can see with a couple of weeks ago, we did hit that resistance trend line, and now we're starting to pull back. So the one thing to note about that trend line is now that we are starting to pull back, it's possible we come back up and continue to tag that trend line, and we could hit those price targets in the 4600s at that trend line, which take us all the way out to October and November. So it's still possible this strong bull market continues to roar on going into the end of the year. We can continue to hit that trend line and pull back, and then come back up to hit that trend line, and we can just continue to pull back and then continue to go higher towards that trend line. And we could pull back every single time until eventually we do get a full-blown correction. So this is still a very possible scenario that I just mapped out here, where we get these minor pullbacks, come into these resistance price targets, get another pullback, and then just continue to go higher. That's how these bull markets wear the bears out, and that's why you never want to try to call a top in a bull market. It's always possible we continue to go higher, and until we see some major rollover in the market and we lose the strong bull trend, it's very likely we will continue to see buyers of the dip and continue to go higher week after week. So if you zoom out and you look at a macro level view of the stock market, you do need to understand how strong this bull market really is. So I'm going to take it back off log, and we're going to throw on the Bollinger Bands and the moving averages, and we can see our 20 simple moving averages down here around 43.30. So from last week's close back down to the weekly 20 simple moving average is just about another 2.7% drop, and we're at significant support. Below that, we should still have strong support around 41.55, and our 50 EMA is down here just in the low 4,000s. So there's still plenty of support to the downside, and it's still possible all these levels act as support, and we never actually lose the bullish trend before we continue to bounce and start going higher. So while we are getting rejected at that resistance trend line, don't just assume the market has to roll over and die. It's very likely we could bounce off of any of these support levels and continue to tag that trend line. I'll go back over to that trend line one more time just to show you what I'm talking about. And if you go back into the trend line around 2014, you could see plenty of times that we hit that resistance level, saw a dip, and then continued to go higher. And then we eventually do get deeper dips. But what I'm trying to tell you is we continue to make higher highs and higher lows, and we continue to see the bull market roar on. So if we do hit a spurt of volatility, we could see a choppy market. But overall, with the strong bull trend, you could see these markets do tend to go higher. Eventually, we see the market topping out and losing momentum, and that's when the bull market will roll over and you'll get a full-blown correction. So until you see some sort of distribution in the price action, you won't really see a stock market correction, because overall, all of the market participants need to start exiting their positions before you're going to see the market roll over and die. So you're gonna see a very choppy sideways market before you see that rollover, and we just have not yet seen that. We still see a very impulsive and strong bull market, and that does mean the market is likely going to continue to go higher after we do reach critical support level. So pay attention, because this pullback is definitely the real deal pullback and you don't want to ignore it, but you don't just want to assume that this bull market topped out and this is going to be the correction. While it's always possible the pullback will turn into a correction, you still need to be objective and play it day by day, and this is still a very strong bull market that is barely off of the all-time highs. So don't rule out those upside price targets in the 4600s after we complete this pullback. It's very likely we continue to go higher into the 4600s on the SPX. You could see the Bollinger Bands are still expanding, so we still have plenty of upside without any resistance from those Bollinger Bands. On the bear bull survey, you can see that we did lose some bullish percentage because we went down from 43% down to 39%. We see a lot more people joining the neutral camp, and we still have 27% bears, so this still doesn't look like an overly greedy market. We were starting to look greedy in the 43%, and I did tell you if we saw the bulls going to 50%, you will want to be a lot more cautious because you do want to be a contrarian. You want to be fearful when everybody else is greedy, and right now we're starting to see those greed levels backing off now that we're starting to get this pullback. So the more cash there is on the sidelines, the more likely the market will go higher, because that cash eventually will buy the dip and we will drive the market higher. You want to see a lot of greed before you call for a stock market correction, and right now we're seeing the greed actually going lower as the stock market pulls back here. So this is still a Goldilocks ratio of about a third position in each camp, and that really isn't what you're going to see during a stock market correction. So overall, the bear bull survey is probably telling us the market wants to continue to go higher. So jumping back over to the SPX, continue to stay the course, and this is still a very strong bull trend. There's nothing from last week's price action that we weren't already prepared for, because I was telling you to be cautious of a pullback once we hit that level at 45.34. So we're getting the pullback, and now's the time to start thinking about when you should be buying the dip. So watch those critical support levels below. And also remember, I do day-to-day analysis where I can give you support levels that are critical each and every day. Jumping over to the NDX weekly chart, we can still see we're in a strong bull trend with price action well above all the moving averages, and we still do have the really strong bull trend. The price action is still above that 15,272 level, and our next level is just above at 15,985, and you could basically round that up to 16,000. We could see from this pullback to that price target is about 3.4% to the upside, and it's still very likely the NDX is going to reach that level. We still have a ton of support below, and the 20 simple moving average from last week's close is down there about 5.8% lower. So yes, we can still pull back quite a bit before we get to significant support, but there's no reason to believe we have to pull back that much while we see such a strong bull trend. You can see there's plenty of room in the upside Bollinger Bands to get to that next price target, so we're not going to see any resistance from the Bollinger Band. Now I can also switch this over to a weekly log chart and show you the trend line on the NDX, and it's not quite as clean as the SPX, but you can still see this trend line has been very critical in keeping the price action on the NDX below the trend line. You do get a little bit of a breakout every now and then, but it doesn't hold, and you see the price action pulling back. So from the NDX resistance trend line on the log chart, you can see it did successfully call the top in 2020, and we did see critical resistance in 2018 as well. Now the thing about the NDX is we did break out above the resistance trend line, so this level is now a support trend line. We broke out in July of 2020 and we backtested that level as support multiple times, and now we're well above this trend line. So the NDX is looking very bullish, and that does tell us we could likely see the NDX continue to climb higher. We have a ton of support above the trend line, and we could just continue to go sideways and correct through time if we don't see a significant pullback in price. So I can't stress it enough, you don't want to try to call a top in a bull market, because as you can tell, the NDX is still very bullish, and it did break out above that resistance trend line, and it's continuing to form higher highs. So calling a top is a loser's game, and it's just not something you want to be in the business of. Just stay the course and follow the trend. The NDX is still in a very strong bull trend, and the price action is still above all the moving averages. So there's no reason to believe at this time that we have to see a correction. Prepare for a correction, but don't just assume one has to be here. And if you're trying to short the market, just be very cautious, because as I've shown you many times, typically these pullbacks do get bought up and we continue to go higher. On the Dow Jones weekly chart, we do see a different picture with price action slicing below the 20 simple moving average. Now we still do have the full bull trend on the Dow Jones, but the price action leads the trend, and we're starting to see price action looking weaker. So with the price action below the 20 simple moving average, if we continue to head lower, it is likely we come back down to the support trend line, which is somewhere around 33,850. If we see that breaking down, you can see we will be below the lower Bollinger Band, so it's not likely we'll see too much selling to the downside. If we continue to see the Bollinger Bands expanding, we could come back down to the weekly 50 EMA. But overall, this price action is concerning because we are breaking critical support, but it's too soon to say it's the real deal rollover because we haven't lost a bull trend yet. So if we start bouncing as soon as next week and we're back above all the moving averages, we will see a continuation of the bull trend. The Bollinger Bands are squeezing, so it does look like there will be a big move coming, but these Bollinger Bands can squeeze for quite a long time before we see that breakout. So on the Dow Jones, look for a break below the support trend line right around 33,850 or a breakout above all-time highs above 35,500. So the Dow Jones could be leading the way lower, so it's definitely something you want to pay close attention to. Price action breaking below support is always a warning sign, so watch that closely. And if we see a continuation to the downside, we will want to watch that support trend line right around 33,800. On the Russell 2000 weekly chart, we can also see a pretty bearish looking candle with price action closing below all the moving averages except for our 50 EMA. The Russell 2000 has been consolidating and going sideways for quite a while now, and we still see nothing different in the Russell. We have no bull trend or bear trend, and the price action is just chopping between the support trend line and the resistance above, and we don't see the Russell 2000 with a breakout in either direction. So overall, we need to see the Russell 2000 breaking below the support trend line right around 2130 or breaking out above the all-time high right around 2350. Either way the Russell breaks out, it will be a huge move because of the long-term sideways consolidation. So right now, the Russell 2000 is not a great trade in either direction because we don't have a decisive trend. Wait for the breakout to all-time highs or the breakdown below critical support, and then you could either short the Russell or go long depending on which way it moves. But overall, be patient on the Russell 2000 and watch these support trend lines and the resistance above. On the VIX weekly chart, we can definitely see a big spike in volatility this week with the VIX closing near 21. That's right around where our resistance trend line is, so if we continue to see the VIX spiking, that will tell us that this pullback is likely turning into a stock market correction. If the VIX breaks out above 21 and closes above 23, it will look like a stock market correction. However, if the VIX hits the resistance trend line and gets crushed all the way back down to the support level at 16, we could see brand new all-time highs. So we'll learn a lot following the VIX going into next week, so watch resistance at 21 and watch to see if we can break below that level at 18.2 because that will be a bullish development if we see the VIX getting crushed. So right now the VIX is shooting out a warning sign that says be very cautious during this pullback because it's possible we see plenty more volatility and we could see this pullback turn into a correction. But we don't see any confirmation in the price action, so we need to stay objective and we need to watch that resistance level at 21 on the VIX. On Bitcoin, we're still trading above that critical support level at 45,000 and we still do have the weekly bull trend. Bitcoin did see that really sharp pullback into the 30,000s and we did get a very impulsive move off of that support level. So it's no surprise after an impulsive move that we get a pullback. So overall, looking at this price action, it's completely healthy and completely normal. When you get an impulsive move this powerful, you do expect to see a pullback eventually before you can go into another wave higher. So this pullback is not bearish, it's actually healthy for the market and it will allow Bitcoin to go higher as long as we don't lose critical support. So on the weekly chart on Bitcoin, you want to see price action staying above 45,000 and not breaking below 42,000, which is our 20 simple moving average. We still have the full bull trend and price actions holding above support, and this is a very healthy pullback after a very bullish rally. So overall, if Bitcoin can bounce off of these levels and take out the previous high at 52,000, we're more than likely going to see brand new all-time highs on Bitcoin. As you can tell, I have price targets that take us to 67,000 and right around 75,000. So if we can break out above 52,000, we'll be looking for a breakout above 59,000 and we're well on the races to new all-time highs. So Bitcoin still looks bullish and this could be a buying opportunity as long as the price action stays above 42,000. We could still come all the way back to 37,000 and still remain bullish as long as we don't see the price action slicing through the 50 EMA. So overall, looking at the Bitcoin chart, it's still bullish and this could be a buying opportunity going into the rest of the year. So jumping back over to the SPX, this is definitely a warning sign that we need to pay attention to, and a lot of the volatility we will see going into next week will tell us a lot about this market. We're either going to see the pullback turning into a correction, or we're going to hit a critical support level and start bouncing and continuing to head higher. Either way, you need to follow the price action and you'll know exactly what's going to happen if we see a positive bounce off support. If we see price action slicing through support, we could start losing the bull trends and then we could start to see this market rolling over. Remember how the market works is we're more than likely going to see the market roll over on the daily chart before we see it rolling over on the weekly chart. On the daily chart, this is definitely a warning sign we need to pay attention to. And if I do switch this over to a daily chart, you can see that hard rejection at resistance and that very bearish looking candle on Friday. So if we don't bounce next week and we don't start breaking back above these support levels and maintaining the bull trend, we could start to see weakness in the stock market and we could see a full-blown correction. So play the market day by day, and if you're new to my channel, I do daily analysis on the stock market to always help you stay on the right side of the trade. I also do have my own trade alert service that only trades TQQQs called BANC Trade Alerts, and it does very well in all market conditions, but exceptionally well in volatile markets. I am currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alert. You can find out all the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.